Hi everyone, welcome back to another episode of the Explain the Stock YouTube show. My name is Aziz, and with the holiday season upon us, I'm feeling extra generous today. That's why in this episode, we're not analyzing just one company. We're diving into three: Pinterest, Snap, and Meta. As usual, we'll be using the explainthestock.com platform, and if you haven't signed up yet, head over to explainthestock.com and access all of this data for free. I usually start my day reading the news about the stock market and about the companies in my watch list. And today I saw this piece of news that mentions that there is an insider trader transaction that happened among Meta employees. And it's very easy for you and for me to see that directly on Explain the Stock platform. So if we head over to the Meta ticker, and we go to the trading activity here, and then we click on Insider Employee, we see that Mark has actually executed a lot of sales this year, 90 to be precise, and the most recent one was in December 20th. So if we click on that link specifically, it redirects us to the official filing of it, and then we see that Mark did actually execute a sale on December 20th, and it was filed in December 23rd. All of this information, you can find it directly on explainthestock.com. And if you'd like to be notified of these transactions as soon as they happen, drop us a comment in this video, and we might be working on that feature next. So if we head over to the news section right here, let's look at Pinterest. We can see that there are a few news articles about an excellent stock that's down this year that should be considered to be bought. Is it an undervalued growth stock? And let's look at the dip finder here. This dip finder essentially compares the current stock price with its 200 simple moving average. It's a good way to determine whether there is a dip for a given stock, and acting on that dip should really be based on your assessment of how attractive this company is. And in fact, we see that Pinterest and Snap do trade down compared to their 200 SMA. And there is a theory that stocks eventually converge back to their mean. And based on that, people would be encouraged to look into these specific stocks as a good opportunity for a buy. Your analysis should be a little bit more sophisticated than just comparing to its moving average, right? Let's look at how these three different stocks have performed over the past 12 months. So if we add Pinterest and Snap and Meta and compare them to how they did over the past 12 months, what we see here in these 5 different curves. So if you've invested $100 12 months ago, Meta would have brought you 70%, so you'd be with $170 as of today. The S&P 500 would have brought you 26%. The Nasdaq QQQ would have brought you 28%, whereas Pinterest you'd have lost $19, and Snap you'd have lost $33. So in a year where the S&P 500 gave 26% and QQQ gave 28%, losing money is quite rough. Now, Pinterest, Snap, and Meta share a lot in common. But here's the twist. Each one of them has a different investment story. And of course, we can't ignore the elephant in the room, TikTok. But since TikTok is not publicly traded, we'll leave it out of today's analysis. So let's jump in. Well, this three company belongs to the social media space, right? Most social media companies out there make money by printing ads. In terms of users, Pinterest records that they have over 500 million users that are active every month. If we look at Snap, they record almost 500 million active users every day. Big difference. And if we head over to Meta, even though they don't directly mention the active users across all of their ecosystem, that number is around 3 billion daily active users. What they do mention in the latest earnings call is that they have over 500 million monthly active users that use their AI features. And this information alone gives you a good indication of the different scales that these three companies are in. Meta is really a massive company with a massive user base compared to Pinterest and Snap, who play in a completely different league in terms of at least active users. If we head over to the financial statements of Meta, if we compare the market cap of all three companies, Meta is at 1.5 trillion, Pinterest is at 20 billion, and Snap is almost at 20 billion as well. So this also gives you a good indication of the different scale here. But what about the revenue? Well, last year, in 2023, Meta recorded $135 billion in revenue, whereas Pinterest recorded about 3 billion in revenue and Snap recorded 4.6 billion in revenue. So again, you see the difference in magnitude between all three companies. Now, what's very interesting, and I don't know if you've noticed this pattern, is that between 2020 and 2021, there was an explosion across all three companies. 2020, 2021, explosion in revenue across all three companies. And this was mainly justified by the fiscal stimulus that happened during COVID. But then what's interesting is that the next year, 2021 to 2022, saw a sluggish growth. And in fact, for Meta, actually it decreased in revenue. For Pinterest, a much smaller growth, around 10%. And for Snap, similarly, a very sluggish growth, around 10% as well. However, when we compare revenue, what's very different among these three companies is that 2023 also saw a very sluggish growth for Snap. In this case, barely growing at all, right? Revenue growth year over year from 2022 to 2023, 0.1% for Snap. For Pinterest, 9% again. But what's very different is that Meta grew 16% between 2022 and 2023. And this is off of a base that's over 20 times bigger than its competitors. But what happened? Why was there a sluggish growth between 2021 and 2022, and then that growth seems to continue in a sluggish manner in 2023 for Pinterest and Snap, but for Meta is not the case? Well, to understand that, we have to go back in time and remember what happened in 2021. In April 2021, I don't know if you remember, but there was this regulation that is called App Tracking Transparency, otherwise known as ATT. And if you're not familiar with ATT, this was a massive game changer for advertising platforms. Essentially, it limited how companies like Pinterest and Snap and Meta track users across the internet. And let me explain why this matters. Imagine you're searching for couches on Pinterest. You see an ad for a furniture store, and later you visit that store's website and make a purchase. Before ATT, platforms like Pinterest could track this journey and attribute the sale to their ad. And we won't get into the flavor of the different attribution models out there, first touch, last touch, and others. I'll add a link in the description if you're interested in that. But as soon as ATT happened, it changed the game. It became much harder for platforms to prove that their ads actually led to sales. And this had a devastating consequence for the smaller platforms to prove to businesses that their ads actually led to sales. And in 2022, all of the social media platforms really struggled to keep their return on ad spend good enough for their businesses to pour more money on those platforms. But the fact that Meta grew by 16% last year and is on track to grow by 19% this year shows that Meta did find a way to crack this ATT issue. And to understand this dynamic between businesses and social media platforms, let's talk about the advertiser journey. Typically, companies have an ad budget, a marketing budget, and they want the highest return on that budget possible. For every dollar that they spend, they want to have more in return in sales. And to do that, they test different platforms. They allocate their budget across different platforms, and then compare them compare the results among them, and then they double down on the one that deliver the best results. For Pinterest and Snap, well, the return on ad spend doesn't seem to be there, and that's why they were not able to grow their revenue just as much as Meta. And one of the reasons why that is the case is that Meta was able to create an ecosystem around their users, and they're able to spend their advertisers' budget across this ecosystem, across Facebook, across Instagram, Messenger, and WhatsApp. And all of them are working together to maximize the return for advertisers. This family of apps strategy really gave Meta a major edge. And it's very much a flywheel effect. More ad spend leads to more conversions, leads to better return on ad spend, leads to even more budget being spent on the Meta ecosystem. And that was a little bit of context around the revenue growth of each one of these companies over the past 4 years. But if we look now at the financials of these companies, if we look at free cash flow, and this is a very important metric to compare companies because this translates to the ability of a company to convert its revenue into cash. Meta has been quite efficient into converting their revenue last year into free cash flow. From 130 billion in revenue, they were able to convert 43 billion, almost 44 billion in free cash flow. And that's not the case for the other two. So Pinterest, out of the 3 billion in revenue, they were able to convert only 600 million in free cash flow. And what's very concerning about Pinterest is the fact that they're not able to keep their stock-based compensation in check. In fact, it keeps on growing, and usually companies use stock-based compensation as a way to attract talent, but at some point that needs to be controlled. Last but not least, let's look at Snap and their ability to generate free cash flow. And I think this is where the story really is. Despite having a higher revenue than Pinterest, Snap is at 4.6 billion in revenue. They're actually not able to generate more than 30 million in free cash flow last year. And this is quite concerning, right? The trend here is not looking good. If we go into a quarter by quarter view on that free cash flow, this is where you'll see that there is an inconsistent pattern between quarter to quarter of free cash flow being negative, then being positive. And this is something that's a bit concerning for Snap. Last but not least, let's have a look at their PE ratio as an indicator of how pricey a specific stock is compared to the industry. Well, over the past 12 months, Snap did not generate earnings. That's why you see that their PE ratio is negative. But in the industry, the average PE ratio over the past 12 months is around 49. But let's have a look at a company that did generate earnings last year, and that's Pinterest. If we look at the past 12 months in earnings, Pinterest was able to generate earnings, and that's why they have a positive PE ratio, but it's way above the industry PE ratio, right? It trades at a 94 PE compared to the industry that's at 49. And a PE ratio that's way above the industry usually means that the stock is quite expensive. But now if we have a look at Meta, we'll see that they have a PE ratio over the past 12 months of almost 28. The first thing to notice here is that the industry PE ratio seems to be different from the one that we saw for Pinterest and Snap. Why is that? Well, the PE ratio that you see here is the PE ratio over the past 12 months of companies in the same industry as well as in the same stock exchange. And Meta is in the Nasdaq, whereas Pinterest and Snap are in the NYSE. That's why it's very important to understand the different metrics in which you compare. But still, Meta at a 28 PE ratio compared to similar companies in the Nasdaq or similar companies in the NYSE is relatively cheap. Like we're talking about a company that consistently generates free cash flow, that is able to grow that free cash flow year over year and grow their revenue year over year, double digit in the high teens, trading at a PE ratio similar to the companies in their industry in the same stock exchange and much lower than in the same industry in a different stock exchange. is a good indicator that Meta is quite attractive valuation-wise compared to the other two. So let's zoom out and compare these three companies side by side. Let's start with Meta. Meta is a behemoth. They are at a market cap of $1.5 trillion, over 50 folds compared to Snap and Pinterest. They are a competitive PE ratio compared to its competitors. It was able to grow its revenue despite the ATT regulation and was able to crack the ROAS metric for its advertisers. So for me, Meta is definitely a buy for me. Their financials are pointing in the right direction and they're able to consistently convert revenue into cash, and they're reasonably priced. Whereas that story is very much different from Pinterest. Pinterest was not able to grow their revenue merely as fast as Meta, while its revenue is 50 folds smaller, which is a bit counterintuitive, right? You'd expect smaller companies with smaller revenue to be able to grow that much more easily than a company that has a much higher revenue. And its PE ratio is very expensive. When you compare that to the 49 PE ratio in their industry in the NYSE and the 27 in the NASDAQ, this is a company that's extremely overpriced. So to me, there is more downside for Pinterest than upside. And this company, in terms of price momentum, hasn't been going anywhere over the past 2 years. Last but not least, let's have a look at Snap. Well, PE ratio wise, this company is still not consistently generating earnings over the past 12 months. So definitely a question mark here. In terms of revenue growth, also very stagnant, even though this year they're expecting to grow by 15%. But again, this is still smaller than the revenue growth of Meta that's generating 50 folds more revenue. So nothing impressive there. So the story for Snap is that this is a growth stock that's still struggling to reach a consistent profitable situation. So I'm not really excited about Snap, and I'm not going to take the risk of investing in this growth stock. If you've enjoyed this episode and want to see a feature that helps you compare stocks side by side on explainthisstock.com, drop us a comment below on this video. We're always working on features that help you build a better narrative for your investment strategy. Thanks for watching, and don't forget to like and subscribe and hit that notification bell if you enjoyed this video. Happy holidays, and I'll see you next time on Explain This Stock YouTube show.